Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, June 28th, 2019 DecisionPoint show with your hosts Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right, I do have my dad here. I was going to ask you just to start off, what did you think about the recovery today at the end?
Well, I didn't think it was much of a recovery. Um, I think everybody's waiting for the weekend with the trade talks, and see what comes out of that.
Yep. It seems to be the market is fairly tentative from what I'm seeing as well. I mean, got to wait and see what happens with the trade issues. I know that that's, of course, weighing on most of investors' minds right now.
Right.
But can you believe it? It is the end of the month. So today we're going to cover not only our broad market and scoreboard indexes, but we'll do a monthly review. We're going to look at the monthly charts since they all just went final as the market closed today. We will look at the DP indicators. I'm going to spend a little bit of extra time on focusing on the S&P 600. I'm planning on writing about that in my Chart Watchers article this weekend, so you'll get a bit of a preview. Just like you get a preview of the DP weekly wrap that Carl does publish every Friday, and it basically gives you those monthly charts and the big four, and you get all of that commentary. And as a bonus today, we're going to call it Carl's Grab Bag. So a lot of interesting charts to share with you. So let's go ahead and get it started with the DecisionPoint scoreboards. No changes this week. The only sell signals remaining right now are these PMO sell signals. You'll find these signals on the monthly charts for each of these indexes, and I will be looking at those so you'll get a clear picture of these signals when we get there. But that's really the only place we're waiting for the change. I will feel a lot more comfortable when we do get this change, but it's just not materializing just yet. Our DP sector scoreboard, everything's on a buy. XLE is the only laggard right now. It is starting to make a move though, so we'll have to see what that looks like on the charts. I can throw that one in there as well really quick. But let's go ahead and let's go look at some of these charts. And I'm going to go ahead and I'll pull up the XLE just so you can get a look at those sell signals. All right. So an intermediate term trend model sell signal is right here where your 20 crosses below the 50, below the 200. And then when we get these negative crossovers of the 50, those death crosses, as they call them, 50 below the 200, that's where that long-term sell signal comes from. So all of the other sectors have their 50 above the 200 and their 20 above the 200, but we're still looking at recovery coming up on XLE. Let's dive into our relative chart. The information I really wanted to point out on this chart is, we hit relative lows. This is a price relative to the S&P 500 for all of these major indexes. And we hit relative lows on both the mid caps and on the small caps. And we are finally now starting to see some outperformance by the S&P 400 and the S&P 600. Now, remember, this is price relative. So this doesn't mean that the OEX has been traveling downward. It just means that it's not traveling upward quite as quickly as the S&P 500. And with these recoveries, we're seeing them make moves relatively stronger than what the S&P 500 is doing. So just wanted to make sure you could note that. Just lost my mouse. Well, we will just move over here. Okay, so that was what I really wanted to point out on the relative chart, but let's look very quickly. This is the price chart of all the broad market indexes. S&P 500, the SPY, and RSP, the equal weight, you can see are still in these, are in a rising trend. We ended up with higher tops. We've made new all-time highs. But if you notice the S&P 400, the 600, there's still a very large gap between their all-time highs and where price is currently. Now, the Dow Jones finally started to make some improvement. and hit an all-time high. So now we're getting that, seeing that rise. And then we've got the NASDAQ, which hit an all-time high back in April, but we did not get that on this rebound to the upside before it turned down. Global indexes, the global markets, really no changes on this chart to make sense to discuss, except that the France ETF, we're finally seeing it move out of that bear market configuration where we've got declining tops. We're now seeing a higher top than previously. So we are starting to see some recovery, at least for France, and then slightly for Germany. But again, notice the difference between their all-time highs versus where they're trading now. I think that's the important thing to take away from this chart. All right, let's look quickly at the Dow and the scoreboard indexes. Just noting, when I was looking at this chart, the declining tops trend line on the Dow, the OBV is confirming it, but I like the way the PMO really didn't lose that much of its move to the upside, even during that price decline. So I think that is a positive. Oh, let's do it this way. All right, Dow weekly chart, really nothing to note here, except we are still on that PMO buy signal. And you can see that, we didn't quite hit an all-time high, again, like you're going to see on some of these other charts for the other indexes. All right, this is the monthly chart for the Dow. There's the sell signal from the scoreboard with the PMO below its signal line. So that's, again, the only sell signals we're really seeing on these scoreboard indexes at this point. Okay, daily chart for the NASDAQ, really nothing to report here. We did get that pullback. It came in just below what I was looking at as a support level, and it did close below it, but we are rebounding at this point. And again, the PMO has really not lost any of its luster. It slowed down, it decelerated, but it's heading right back up. Weekly chart for the NASDAQ, bottom above the signal line. You'll see this on the other major indexes. I think that's a positive, but you can see we did pull back obviously on the week, down at 0.75%. And the monthly chart, there's that sell signal that came in, and the only one that's sitting, again, those are those sell signals on the scoreboards that we're seeing. OEX, it actually held that support level that I showed you where the NASDAQ had failed. OBV is still rising. I think that is positive. Weekly hit overhead resistance and turned back down, and there you go, the PMO bottom above the signal line. Monthly chart for the OEX, again, there's that sell signal on the PMO. This is the meat of it, isn't it? There's that all-time high that we hit. We managed to hold that support level that I was looking at the low and that gap. We didn't close that gap. I think that is also positive. We're heading up to challenge all-time highs. I'm not so certain we're going to see them this week, but I think, again, I like the PMO. It's looking pretty good right now. And it really isn't deteriorating on the weekly chart either. There's that bottom above the signal line, and you can see it rising nicely despite a 0.3% drop. It really didn't affect the weekly PMO. In the monthly, there's the PMO sell signal, and we are seeing it turn up, but overall, we're still in a declining trend for the PMO on the monthly. All right, let's look really quickly at these ultra short-term indicators. Wow. I had marked what I was looking at as climactic readings from yesterday. These have just come in. I would say we're looking at an even more climactic readings, and you can see the increase here on the new highs. What do you make of this, Dad? I'm thinking that it's probably and do you see it as an exhaustion, or do you see it as an initiation, or just simply?
You know what? I'm very hesitant to say, because I know we're getting noise just waiting around for tomorrow's trade meeting with President Trump, and Chairman Xi.
Mm-hmm.
And I just think it's, we just have to wait and see.
I know, don't you love that? I'm sure everybody loves when we say that as analysts. I mean, I would just go with, how I usually look at it is what the trend was right before. So to me, I think we're still in an initiation phase, but I'd be a little bit concerned too about the exhaustion. That's why I think you're right. It's hard to call it at this point because
Yeah,
it's not been much.
you could say that. I would agree with
Mhm.
that.
All right, short term. We're finally seeing these turn up. That's what we want to see. I was getting a little nervous because they fell below the zero line, but as I've highlighted in green, when you start seeing the internal strength because you've got these oscillations just above the zero line, that usually accompanies your rallies. And when we don't see that, when we start to see deterioration below the zero line, that's when we generally end up in a position we don't want to be in. So seeing that bottom on these indicators, I think, is very positive. But it is just a tick upward. So it's hard to get excessively excited about it. This is one of the reasons I wrote on Wednesday that I wasn't that concerned about the top on these indicators. It was just, again, one of those tick downward, and we didn't get a negative crossover. And now we're seeing that bottom above the signal line. I think that is positive for the intermediate term. Oh, that's going to be you. I'm going to go really quickly into just to show you the chart pack we have for the S&P 600. The trend and condition chart pack. See, did I use the trend and I used the straight shots. My apologies. The straight shots. You can go to the index and then you get all of the indicators specifically for that index. And we're starting to see this improvement now. Look at the breakout on the S&P 600. The PMO is just about above the zero line. I'd like to see that. OBV, if we do get a down day, we'll end up with a higher top regardless. I think that's very positive. There's your weekly chart, and you can see we're almost getting that PMO buy signal for the S&P 600 on the weekly chart. Again, seeing the small caps beginning to participate is, I think, a good thing. Now, we're not seeing the recovery just yet on the monthly chart for the S&P 600, but let's face it, we're only now just starting to see some good movement to the upside there. All right, and here is the S&P 600. These are the STOs, the Swinland Trading Oscillators, and these are specifically for the S&P 600. Now, I note that they haven't updated just yet today, so something you might want to take a peek at later, but notice we were already seeing a bottom come in on the STOB and nearly on the STOV. And I'm going to just briefly, I'm not going to go through all of these because we have plenty to cover still. I know my dad's got a lot, but I just wanted you to see that we do have all of these different indicators, and it gives you a really good feel for what's going on within that index, which is why I'm going to go ahead and write about most of this in my Chart Watchers article to give you the analysis that really does go with these charts. But there's the ITBM and ITVM also bottoming and getting ready to move above the zero line, which is also, I think, very positive for the S&P 600. We have a new highs, new low chart for the S&P 600. You can just click right through. Here's the advanced decline lines, which I think is always interesting, and nice climactic reading there on the advances minus declines from yesterday. Then we have the McClellan oscillator as well, and summation index for the S&P 600. So I'm going to pass it over to you, Dad. You go ahead and bring your charts up, and we'll look at the big four. And I'm very curious what you've brought as part of your grab bag today.
Okay, getting my charts together here.
There you go. We see them.
I'm sorry?
I see them. You're good.
Okay. The dollar broke down last week and consolidated this week below the rising trend line. What we've got there is basically a reverse flag formation. And we also have a head and shoulders neckline going through here, which broke the neckline. I don't like to talk about head and shoulders, but it's there. And there was one of, oh yeah, the PMO is falling below the zero line. So there's real weakness in here. Let's see the weekly chart. Long-term resistance has turned price back, and notice that the PMO is kind of breaking down from this flat pattern it had for, almost a year. Again, that overhead resistance going all the way back to 2008. And this chart, the PMO on the monthly, is getting ready to top, it looks like. Gold had a good week. I had a good couple of weeks, actually. We had a breakout above here. This was almost 7% from the resistance that it got above, so it's clearly decisive. And this is a longer term resistance lines. Here's the one that we just looked at on the daily. Longer term, this is the big one right here, and it broke out of that, and it's above, it went above that almost 5%. So that is a decisive move. The monthly chart, again, we see the breakout. About 2 weeks ago, I talked about the saucer getting a handle put on it, and I'll be discussing it in my blog. That basically, I showed it when a couple weeks ago. I imagined it being above this line, but I'll bet you that we're going to get a handle, but it's going to go halfway down through here and go back up again. So I won't be too upset. It is gold, and it's been very frustrating, but it's basically since here it's been pressing upward. Okay, crude. We've got this happened just late in the day, because when I looked at it, it was just consolidating up here. So we got a breakdown. Again, I don't think the activity overseas has really got people too worried about it. I don't. If it goes higher, I think this is about the limit. But I'm just not seeing so much activity in that way. But and notice there is a gap, so that stopped at resistance here, and maybe that will break through next week. But I'm not really worried about any long-term moves on this at this point. Compared with WTIC, that's in a range right out in the middle of a range between 76 and 42. In case you ever wonder about it, but WTIC stands for West Texas Intermediate Crude. Forgot to resize this one. This shows the range we saw on the weekly chart, and I think that is pretty much going to hold. Notice that the monthly PMO is right around the zero line, which is neutral. So this could continue on really for months or years. I'm not saying it will, but I mean, it could do that because it's after this big crash, it's basing, and it could stay there for quite a while. Bonds, I put a new panel on the bond charts. This is the 20-year yield, and we kind of think that, you know, we're used to thinking, or I have been, that that the yield is kind of a reciprocal of the price and vice versa, but we will see that it's not quite that the case at all. Okay, that's why I wanted to get to the weekly, because now we see the long-term resistance overhead here. And this is the yield. As you can see, at this top, yield was much lower than here, and with interest rates going down, I would have to say that we'll probably see higher prices before rates hit the bottom here, which is this is why I added this extra panel, because it basically gives us a new perspective on this, and something I hadn't ever talked about before. This looks very bullish, this chart, and of course we still have the yield down here. I don't think that's I don't necessarily think this resistance is going to hold right now, and we got a nice bottom here, very oversold, as a matter of fact, historically. Okay, here's something I want to look at every week for a while anyway. The yield array. Everything is still inverted. The 20 and the 30-year yield is still higher than the 1 month and 3 month yield, but everything else is lower. So this inversion is a major consideration. And this interesting chart again. This is a problem. You see what we had a peak in yield here, and it didn't bode well for the market there. That's one data point, and so we can't necessarily say that everything time it does that it's going to be a problem. But I think it's going to be, because right now, and notice that this is now rates are 70% lower than they were here.
Wow.
Right now, and we're still playing around with a market top, and I'm not sure why they're talking about lowering rates next month, but oh well. Okay, it's something I wanted to show you that I'm going to grab back here. I was looking at the last Friday. We had a options expiration, end of quarter options expiration, and these are all end of quarter marked right here. And I noticed it's a lot lower, and whereas what we had the previous quarter is more like average. We have spikes and dips, but on the areas I looked this fairly carefully, and on the ones that hit this line, that's just a normal day of options expiration without any breakouts or breakdowns that would cause extra volume. going to this chart, I wanted to emphasize again, here's that, see how much lower it is from what we'll call the average. And the point I'm getting at here is we've been having very low volume all along in here. And I think if you take this top off here for the options expiration, you're going to see that it's below the 250-day moving average. So one of the things to keep in mind on those expiration days, and especially if you're a person who uses volume. Here we have, I've been following the IT trend model buy signals for the S&P 500, and it's right now looking pretty bullish in terms of going up. Same with the Golden Cross percent index. It's back on it, went on a sell, and now it's back on a buy. Obviously, this is not going to deal well with whipsaw like this. These reversals are too fast, and this is going to get caught. Mm-hmm. Bitcoin.
Yes.
Couldn't resist that. Notice here's the big zoom. Here's 90% decline. Reminds me of the crash of 29 and into 1932. But then we finally hit the base, it looks like here, and it's working higher again. So this is up quite a bit in percentage terms. But you can see we had a parabolic here, and then this was about a 20% drop. And now we have a higher percent, and you see it broke it this week, and it might go down a little further. I'm not expecting a great big crash. I think the people are running again, and they're going to be playing with this for a while. I'm surprised it's going up, but then,
I know. There's been a lot of hype about that move to the upside for Bitcoin too.
Right. It makes no sense. I wanted to put the Ghostbusters logo on this chart, and so I could say, if something goes wrong, who are you going to call?
Exactly. That's the problem with Bitcoin, isn't it?
Right. There's nobody in charge.
Mm-hmm.
Well, that pretty much wraps me up. I think it looks like about a minute earlier or less. So
yeah. I'm going to share the screen one more time. I'm going to show everybody where you can find the DP chart packs. If you go up here to your account, then scroll down, here are the chart packs, hit manage chart packs, and then boom, that's where you can load the DecisionPoint chart packs and check them out. You do have to be an extra member or above because they have multiple chart lists within them. So something to think about, but they are free. So go check them out. Hey, I want to thank all of you for being with us here today. Please remember to fill out that survey as you leave. We do love to get your feedback, and we listen to it all the time. I hope you have a great weekend, and we'll see you back here next Friday, I hope. Happy trading.